Hi folks, this is Sean Hyman from Chart of the Day, and I just want to talk to you about watching out for the bear flag pattern. This is on the Euro Dollar daily chart, and I want to talk to you about how I watch the majors for how they will impact the crosses. In other words, Euro selling will affect Euro crosses and weigh them down. And as you know, we had this uptrend for the longest in Euro Dollar. It decisively broke right in here on this very long red candle and quickly headed down ever since. Stopped at around the 200-day simple moving average, which is not shown on the chart, and has just been slowly creeping up. And a lot of that has to do with the non-farm payroll number that comes out on Friday. Matter of fact, probably by the time that you see this, the NFP number will already be out. But that's not the focus point. The focal point is the flag pattern. And so I want to talk to you about the flagpole and the flag that you see here. So picture a flagpole turned upside down, and what happens is the pair just really bolts downward, and then makes a little bit of a recovery, and this looks like the start of a new uptrend is what it'll appear. But it's kind of a weak, tame drifting upward, if you will, and you could see it drift up some more, and definitely do a little more drifting in through here, especially before NFP. It's common for particularly the euro dollar, but many dollar pairs, to not really break out and get very directional. It's very common for them to just meander around in either a very mild trend, like what we would see here, or a sideways range. And that's because big institutions will not make any big trades before such a big number. And so you'll probably see this drift upward. It definitely could break out to the downside on the NFP number. If it broke out to the upside, of course, we would have a new temporary uptrend, of course. The greater likelihood is for it to break to the downside. So that would be on dollar strength or euro weakness if that were to happen. So the important part about the bear flag pattern is, in order for this to be a legitimate bear flag pattern, in order for this to be legitimized, and in order for it to be completed, the pair has to fall below the flag at some point. In other words, this could continue up and these lines could be extended out, but it has to fall below the flag pattern, and it has to close below the flag pattern for you to likely have a bona fide bear flag pattern that is completed. And typically a bear flag pattern, you can take the length of this pole, scroll it down, and start it from the point of breakout, wherever that may be, and let it head downward, and you'll see that you get a minimum price target out of that. Also, for Elliott waivers out there, this would likely be a long extended 1 pattern, and then your consolidation upward to 2. If it breaks down in what I think will be this, that would be your long wave 3 that would head downward. Also, we've got this our indicator has started to head up. This is similar to the RSI, the relative strength index, but it's called the LRSI, and you're not going to find it on most charting packages, most free charting packages, that is. You will find it on occasion on a package. I think it's downloadable into like MT4 for free and things of that sort. You can Google search it out there and download it and put it into MT4 trading station, and you can even do that with a demo account. You don't have to have a live account to do that. So I'm not trying to pump or promote the indicator, but if you are ever watching it on my chart, sometimes I do use it, and you're not readily going to find it in your typical charting package. But this will be heading upward. We're likely to get overbought very soon, so I could see this, heading towards the top end of this flag again, and then at some point rolling over, breaking down through the bear flag and heading downward. Again, as a trader, you always want to have a plan A and a plan B. The high probability trade is for this downward move that eventually went into consolidation to eventually continue on and to head downward. So that would complete the pattern. That would continue the downward trend. That would coincide with the overbought reading, which we'll get by the time that it works its way back up here to the top of the pattern again. As we get, as or if we get a euro dollar sell-off, that will weigh down heavily on many other euro crosses, likely euro Swiss, euro yen, etc. Many euro crosses. And so it's good to know, even though I predominantly trade crosses right now in our currency cross trader service, I still watch these majors to see, what might be getting propped up, what might be getting weighed down, because if this breaks, the dollar is going to get a little bit of a pop. The euro is going to get weighed down very severely, and so I know that that's going to weigh down euro crosses, and it will tend to have a negative bias on those euro crosses, almost like ankle weights on a runner. Something just trying to pull it and weigh it down. And so you can take advantage of that by being short euro crosses during that time. If this does in fact break down and head lower, then you would go to your euro crosses like euro yen, etc., and look to see if you can find some selling short or sell signals on your technical indicators. If so, then you could enter short. So remember, you wouldn't want to immediately, just because you saw this fall through, you wouldn't want to go to a currency cross and just automatically throw in a sell short order. What you'd want to do is still identify selling opportunities with your technical indicators, just like you would on your cross, but with the mindset and knowledge of that the euro is getting weighed down on the euro dollar, and that euro selling that's being caused there would likely spill over into the other euro crosses, and or rather, since this is the major, the euro crosses, and weigh them down as well, and that gives you an edge in your trading. Again, we're always focused on how to find an edge in your trading, because having an edge and good risk and money management is as close to the holy grail as it gets. There is no system that is 100%. There is no indicator that is 100% accurate. There's no pro that gets it 100% accurate. There's no pro that makes 100% right trades. So how do they end up winning and making money? They do it by two things. They have an edge, which gives them a high probability of success over time. Notice I said over time. That doesn't mean, they could have several losers in a row, for sure, and still be taking high probability trades. But over time, over months, over quarters, over years, they have gained this statistical edge because they're following the trends, they're following the probabilities, the high probability outcomes, and is equally important, they're having excellent risk management, which means if they were to be stopped out or wrong on their trade, they're risking no more than 1 to 5% of their money on that trade. So that is the chart of the day. It's how a major pair like the euro dollar can affect the euro crosses. And by the time this comes out, I think you'll be able to see a pretty serious move, most likely, in the euro dollar. And that will give you some direction on euro crosses as well. I want you to note those relationships and note how the big moves in the majors can affect even bigger moves in the currency crosses. Because remember, the currency crosses tend to have more volatility, more pips to be had, more pips to be gained, and that's one reason why I focus on them, because of the bigger moves that they produce is the more pips that I can potentially gain, and also I can take out a lot of the dollar noise out of it, so I don't have to worry so much about what the dollar is doing. And I really think that that's going to come into play and help a lot in 2010, because I think we're going to be in a period of stagflation, which is going to be hard on stocks. It's going to be great for commodities. And it's been a no-brainer to sell the dollar when stocks and commodities both have gone up. But I think you're going to experience a lot of volatility in the dollar. Bad volatility, in other words, uncertainty volatility in the dollar as you eventually see stocks head lower and be suppressed, and commodities still go through the roof. And so, being able to take that element out of the equation is really a huge benefit in my opinion, and that's one reason why I have the currency cross trader service. Thanks so much for watching. Bye bye.